Hey everyone, welcome back. Today we're going to do a deep dive into Jabil Inc., ticker symbol JBL. See if we can find an investment opportunity. The thing that I find really interesting about this one is this idea of a dual action strategy. So we're going to be looking at playing both the short side and the long side of the stock. And our source for all this is a Foking Alpha article titled Jabil Inc., JBL. Prepare for a strategic short and long opportunity. Published January 18th, 2025. Yeah, it's an interesting approach. I mean, instead of just betting in one direction, we're looking at, how to capitalize on a correction, and then also how to capitalize on its potential recovery later on.
So the article leads with this idea that JBL is ripe for a correction. Now, for those of us who don't spend all day staring at stock charts, what does that actually mean?
Sure, so in stock market lingo, a correction just means a decline of 10% or more from a recent peak in price. It's like the stock is taking a breather after a steep climb. It's important to note that a correction doesn't necessarily mean something is fundamentally wrong with the company.
Right, it doesn't mean they're going out of business or anything.
Exactly. Now, the article suggests this potential correction could be quite significant. They're recommending a short-selling entry zone of $160 to $165, with profit targets all the way down to $45.
Wow. Okay, so those are some pretty bold targets. What makes them think that it could fall that far?
So they're pointing to a couple of technical signals: bearish divergence in momentum indicators, and a break of the parabolic trend. I know this sounds intimidating, but let me break them down for you. Imagine a car speeding down the highway. Momentum indicators are like looking at the speedometer. And in JBL's case, these indicators are suggesting that the speed, or upward momentum, is starting to slow down. Even though the price is still going up, that's the bearish divergence.
So the car is still moving forward, but it's losing steam.
Precisely. And then we have the break of the parabolic trend. Think of this as the car kind of veering off the highway. JBL's price has been on this steep upward trajectory like a rocket, but it's recently broken below that path, which suggests that the upward trend might be ending.
Okay, so these signals are kind of like warning signs that the upward journey might be coming to an end.
Yeah, that's a
No.
good way to put it. Now, this doesn't mean JBL will definitely crash and burn, but the analysts believe that these signals, combined with historical patterns, suggest a price drop is likely, possibly down to that $45 level.
The $45 mark? The article calls this a significant historical support zone. It feels like we're about to uncover a secret code or something. What's the significance of this particular price level?
Think of support zones like a safety net for the stock price.
Yeah.
It's a price level where buying interest has historically been strong enough to prevent the stock from falling further. And in JBL's case, $45 has acted as a strong support level multiple times in the past.
So it's like a floor that the stock has bounced off of before.
Exactly. So in this scenario, $45 becomes a potential target for the correction and a possible launch pad for a rebound later on. That's where the dual action strategy gets interesting.
Okay, so we've laid out this case for a potential correction. But what makes this a dual action opportunity? Like, why not just wait for the dust to settle before jumping in?
Well, that's where things get really interesting. So while the short-term picture might seem a bit turbulent, the analysis also paints this compelling picture for JBL's long-term potential. Remember that $45 support zone we talked about? It's not just a potential bottom for the correction, it's also the recommended entry point for the long side of this strategy.
Gotcha. So the idea is to potentially profit from the downturn and then be ready to buy in when the price is likely to rebound.
Exactly. It's like catching a falling knife, but with a safety net, and a plan to hold on for the long haul. The article suggests a buy zone of $45, with profit targets of $63, and even a whopping $160.
Okay, I gotta admit, $160 sounds pretty tempting. But what makes them think that JBL could reach those heights after such a dip?
Well, it's not just about bouncing back from a correction. It's about JBL's underlying strength
Right.
and potential for future growth. This is where their robust fundamentals come into play.
Okay, so what does that mean?
Well, for starters, JBL has a remarkably diverse customer base, spanning multiple industries, from consumer electronics and healthcare to automotive and 5G infrastructure. This kind of diversification provides a buffer against downturns in any single sector.
So even if one industry takes a hit, they're not putting all their eggs in one basket.
Right, exactly.
But is that enough to justify such ambitious profit targets?
Well, not on its own. But JBL also boasts a strong track record of innovation and adapting to changing market trends. They've been investing heavily in key growth areas like 5G and electric vehicles, positioning themselves to capitalize on these emerging markets. And let's not forget their history of bouncing back strong after corrections.
Yeah, it seems like they've got a knack for turning challenges into opportunities. But this dual action strategy just seems like it requires some fancy footwork. How do you actually manage both sides of this trade?
Well, that's where stop-loss orders become your best friend. Think of them as safety nets for your investments. For the short position, the analysis suggests a stop-loss at $170. So if the price goes above that level, the short sale is automatically closed, limiting potential losses.
So it's like an insurance policy in case the correction doesn't play out as expected.
Exactly. It helps you manage risk and protect your capital. On the flip side, for the long position, the stop loss is set at $35. This ensures that if the stock unexpectedly falls below that key support zone, you're not left holding the bag.
Stop-loss orders sound like essential tools for any investor, especially when navigating a strategy like this. It all sounds very strategic and well thought out, but wouldn't you need to be constantly glued to the charts to manage these trades?
Not necessarily. A lot of trading platforms allow you to set these stop-loss orders automatically, so you don't have to be glued to your screen watching every tick of the market.
That definitely takes some of the pressure off. So we've got these technical signals suggesting a potential drop, a key support level that could act as a springboard, and robust fundamentals pointing to long-term growth. I'm starting to see why this dual action strategy is so intriguing. But before we get too carried away, let's take a step back and consider some of the broader factors that could impact JBL's journey.
Yeah, that's an important point. Well, the analysis we've discussed focuses on technical indicators in JBL's fundamentals. The real world is a much more complex and dynamic beast. There are always external factors to consider.
Like, what kinds of things are we talking about here?
Well, things like geopolitical events, shifts in global trade policies, even like unexpected supply chain disruptions. That could all impact JBL's performance, no matter how strong their fundamentals are.
Right, so even if they're doing everything right internally, there are still external forces that could create headwinds.
Absolutely. And we can't forget about competition. JBL's not operating in a vacuum. They got rivals, vying for market share, and new technologies are always popping up that could disrupt the whole industry.
It's like a constant game of chess. They got to adapt and stay ahead of the curve.
Precisely. So while the analysis we've discussed provides like a framework for understanding JBL's potential,
Yeah.
it's super important to consider these external factors and how they might influence the company's trajectory.
Yeah, this dual action strategy that we've been talking about is fascinating. But it also seems like it requires a deeper level of analysis and awareness of the bigger picture.
It definitely does. It's about being able to connect the dots between technical signals, fundamental analysis, and those broader market forces that can make or break an investment.
So it's not just about finding that hot stock. It's about really understanding the company, the industry,
Yeah.
and the world around it.
Exactly. And it's about constantly learning and adapting, refining your investment approach. There's no magic formula, but a blend of knowledge, critical thinking, and a healthy dose of curiosity. That can go a long way.
We've covered a lot of ground today, from technical indicators and support zones, to the importance of diversification. Understanding the bigger picture, what are some key takeaways that you hope our listeners walk away with?
I think the biggest takeaway is that investing isn't just about picking stocks. It's about understanding stories. The story of a company, the story of an industry, and even the story of the global economy. It's about being able to piece those stories together to make informed decisions.
So it's not just about the numbers, but the narrative behind the numbers.
Precisely. And remember, the analysis that we've discussed today, it's just one perspective. It's essential to do your own research, explore different viewpoints, and maybe even consult with a financial advisor before making any investment decisions.
This deep dive into Jabil Inc. has certainly given me a lot to think about. It's a company with potential, but it also highlights the importance of staying informed, approaching investments with a critical eye.
Couldn't agree more. Investing is a journey, not a destination. And the more knowledge and insights you gather along the way, the better equipped you'll be to navigate, the ever-changing market landscape.
Well, thanks for joining us on this deep dive into Jabil Inc. We hope you found it insightful. And as always, we encourage you to keep exploring, keep learning, and keep diving deep into the world of investing.